With our panel, Evercore's Julian Emanuel, Invesco's Rob Waldner, and gents, I want to start with this quote from Mike Gapin over at Bank of America. Volcker has left the building. The Fed is embracing painless disinflation and hopes it continues. We're not in Wyoming anymore. Rob, what do you make of that?
Well, I think, Jonathan, it's quite interesting because he embraced disinflation during his speech, and I think you played a couple of pieces about how dependence is there. So what they're doing is they're looking at recent core. I think recent core CPI has been relatively tame month on month over the last several months. But I think he highlighted that this disinflation process is going to be slow and I think a bit bumpy. So I think we're in a little bit of a period here where we got some really good inflation news. We think overall we will get disinflation this year, but we could get some more bumpy inflation news over the next several months. So it's not clean sailing for the markets. If we get worse inflation news, the Fed will be back and we'll get nervous, I think. That's certainly what I heard from him.
There has been a change, though. Julian, I think you'll appreciate this. For much of the last 12 months, we had what many people thought was a Fed cool. Has that Fed cool gone now?
It really has, or it's softening at the very least. But look, it all goes back to Friday. I would suggest that Chair Powell was as surprised as anyone at the extraordinary strength of that NFP number, and surprised as anyone that the labor market has remained as resilient as it has. In the context of Ed Hyman, Ed is as convinced that the economy is as strong now as he is as convinced that a recession is on the horizon late this year or early next. And if you're not confused, you're probably not paying attention.
Well, Julian, let's talk about it then. Is there a window, an investable window, between that strength now and that recession you ultimately expect? Is there something to get long in between? And how big is that window?
So look, for us, this is a process, okay? We expect 2023 to be a year of volatility. It's already proven that to be the case, despite what the VIX is saying. If you look at individual stocks, stocks down 70% over the past year, up 90% or more in a month. That's volatility right there. And for us, it's really discipline and sticking to a stock picking mentality, staying close to your home and close to what you know, with one eye towards risk management, which means eventual managing the downside, which we do think is still part of the unwritten story for 2023 before the new bull cycle begins.
And potentially managing a recession, a hard landing, a soft landing. Torsten Slok over at Apollo has really pushed this idea that maybe we have to think about a no landing scenario. He wrote this morning: from hard landing to no landing, investors have been underperforming their benchmarks because they entered 2023 underweight equities, expecting a slowdown that still hasn't happened. Rob, when's that slowdown happening?
So we think it's better chances than not, Jonathan, that we don't actually get a recession. We get subpar growth. And I think that's kind of what we've been having for a while here. We've had sort of potential or slightly below potential growth. We think we'll get that in 2023. But, the labor market continues to show incredible strength. The details of that labor market report were strong. And at the same time, wages are not showing signs of spiraling upward. So you don't get the Fed panic. So, we think it's an environment where for the year as a whole, it's probably pretty friendly for public markets, public fixed income in general. But we'll be range trading for a while. It's going to be a little bit messy as we get, as I said, noise around inflation.
So, Rob, if that's the case, do you like treasuries at 445 on a 2-year, 366 on a 10-year? Does that all add up?
I think, Jonathan, over the balance of the year, it does. We would be looking for this 10-year right now to be in a range of 3.5% to 4%, something like that. So, you're kind of in the middle of the range. But over the year as a whole, we expect inflation to end the year much lower than where it is now. And we expect the Fed probably to be moving towards cutting rates. And so, fixed income overall offers quite a lot of value on the year as a whole. But of course, we started off as a real boom this year, Jonathan. I mean, we're up over 3%. We were up over 3% in fixed income.
Yeah.
So we could get a bit of a range condition for.
Well, Rob, I was going to say to you, I'm not sure that statement carries the same weight as it did maybe 6 weeks ago. How much value is there in places like high yield, triple Cs, after the rally, the spread tightening we've seen in the last few months?
Well, I think Torsten Slok talked about people being underweight equities. I think investors came into the year underweight all risk assets. So We've seen a real, I think, has signs of a position-driven rally. So we've seen probably spreads come in tighter than where they should be. So that comes back to, where we would kind of want to enter into. So that comes back to my statement. It's probably a little bit rangy. And when we get a couple of negative inflation prints, which we're likely to get over the next couple of months, you probably get a great opportunity to reload if you didn't, get loaded up at the end of the year.
CPI on February 14th, next week. Look out for that. Yields come in just a little bit today. Equity futures are down 0.5%. We need to talk about corporate layoffs again. The latest, eBay and Zoom. Zoom kind of gets headcount by 15% after tripling it in just 2 years. The CEO said this: "Our trajectory was forever changed during the pandemic. We didn't take enough time to thoroughly analyze our teams and see if we were growing sustainably." Katie Lyons, how many times have we heard different versions of that?
It's eerie how often these messages sound exactly the same. The central thesis of all of them being we grew too quickly and now we have to adapt. And that is definitely what the Zoom CEO was alluding to there. You mentioned how they've tripled their headcount over the last 3 years. In January 2020, they had 2,500 employees. By October of last year, that number was more like 8,400. That is how quickly they grew. Now they have to adjust. And it's a similar story for eBay as well. Seeing sales slow down now that the pandemic boom is over, which is why they are also cutting about 4% of their workforce, or 500 employees. Interesting to not see a positive stock reaction for either of those companies today to this news. But I would say the CEO of eBay also had a very similar message. They said the job cuts are necessary to create long-term sustainable growth. It's this idea of sustainability and maybe not being able to sustain the growth rate at which these companies were on now that the environment has softened. And we know they are not the only two companies experiencing this. We can see tech layoffs picking up. That's the white bars here on this chart relative to the other job cuts tracked by Challenger Grain Christmas. So you can see that this is really something that is happening. And it is reflected, too, as well in the economic data. Yes, we had a blowout jobs report last week, 570,000 on the headline figure. But information sector jobs actually were down 5,000 as they were in December. So it's starting to show up, John. And the question is, will it start showing up in a bigger way, considering many of these cuts are just announced? They haven't actually happened yet.
Good
so
point.
We may see a bigger translation into the data later on.
Hey, Katie, thanks for that. Let me just repeat that line.
So we think the pandemic, those elements are kind of behind us. What's supportive probably going forward that's picking up from that I think maybe we didn't really anticipate is that as inflation slows, just real disposable income is picking up. So as inflation slows, as gas prices come down,
of what can happen. And obviously the leverage inherent in those kinds of options can be very attractive when you win once, twice, or three times, despite the most likely outcome in a range trading market being
to the webinar. Please stand.
Just give me like a 3, 2, 1. Hey everybody, welcome to Trading Capital's daily live stream of the market open. It's currently February 8th, and as we kick off the market session today, what we're looking for is kind of an inside day for the markets. You are seeing some strength in tech like Microsoft, Nvidia, so the semis are seeing a little bit of greenness today. It's probably due to the fact that Microsoft is up in the pre-market. You can see it's trading 241, so it brings our average. That's a 2.6 position. We still are short. Microsoft obviously have the big ChatGPT announcement, or their AI, in terms of what they're going to be discussing today. It's probably going to be a buy the rumor, sell the news event. So around, I think, 1 or 2 p.m. today, they come out and discuss what they've been talking about. But you can see that Microsoft is hitting this beautiful upsloping trend line connecting your COVID pivot to your pivot. And it's basically had 5 weeks of straight upside, and you are into some decent resistance. So I do think that this is a pivotal level. Now, there is the potential that Microsoft can still trade all the way up to this 280 level. I don't think it would happen today unless they announce some magnificent new product. But nonetheless, you are seeing strength. The stock is extended. It is the heavyweight that's lifting the market right now. But I do expect that you're going to see some profit taking off of this news-based event. Typically, you do not want to chase news-based events, specifically when the market has known about this event for quite some time now. It's not like it was just announced this morning and you could act quickly and get on this hype train really quickly. So don't chase the news events. We're shorting. It's into massive resistance. Another technical level that I want to show you on Microsoft is that on the weekly chart, we're actually tagging, I don't have it on here, but we're actually just tagged the 100 weekly moving average in an extended move. So again, tons of resistance up in this area. A couple other trades that we're looking at right now is Uber. Uber's had terrific earnings, so they're obviously up on the session. Let me just flip to the daily chart on Uber to see if we can see a level. So the nice thing about Uber is that it had a beautiful move here already, and now it's gapped up into resistance. You're actually tagging and filling this key pivot zone. Let me just see if there's any larger weekly moving averages on Uber. I'm actually going to throw on another moving average here just so I can see from my perspective. Let me just take that away. Reload. Sorry, it was giving us a little issues there. Let's go back to the Uber chart. So Uber, in terms of a day trade level, I would really only look to short Uber. Let me just see here. So you are at pretty decent resistance now, but I would want to see it take out that level here. So we're basically trading at that gap fill, which is awesome. But in terms of a level on Uber that I would feel more comfortable with is around this, about 39, a pierce of 39, and we can see that level. Look at Microsoft come in. So that was a beautiful add level on our short trade. Basically, we added at 272.40, and it's already fallen back 40 cents from that level and falling more. So let's keep in mind that the Dixie, the US dollar, is signaling potentially a breakout still. It has technically broken out, and now you're putting in what looks to be bullish consolidation on the Dixie. Also, let's keep in mind that the 2-year yield is also on watch for a potential breakout, also putting in bullish consolidation. So let's just be mindful of that. Let's take a look at the 10-year yield, which is more caters towards the housing market. Also on watch for a breakout. Notice how, look at this trend line. You dipped below it and you're closing back above. So it's really showing that there's a decent amount of buyers coming into the yield market and really trying to prop that back up. So in terms of other trades, we're just going to keep Microsoft on the radar. Obviously, we're short Uber, Enphase. In terms of Enphase level, we would have to see it pop significantly more. ENPH is the ticker. Basically, it has gapped up as well. Let me just see where it is trading. It's currently at 248. You're piercing and tagging that daily 200 moving average. I would like to see it pierce. I'm going to have to see how it opens in the pre-market, but basically anything a pierce of 250 at this gap fill, 250.19, would be a decent level. If you're playing a little more conservative, you can wait till this pivot high at 259.55. This particular stock has a lot of momentum behind it. I've traded in the past, and you do see a lot of momentum traders pile into the solar stocks, trying to really push the green energy narrative. But definitely you have broken the 200 daily. You could be retracing here, and last time you got rejected over here on a decent amount of volume. So the big question is, will we close above that today? But we are going to keep an eye on that. There is a secondary trend line level that it could retrace to, which is this M-top topping formation triggered. You could be retracing to this 270 area if the market has an exceptional amount of strength. You also saw some upgrades by TripAdvisor. So that one's popping. In terms of a short trade on TripAdvisor, you're filling that gap now. But I would love to see it come up to this 2680 area. But a beautiful extension move. And it's just gapping. A lot of these stocks have gapped up, and it's kind of interesting to see, will we see that gap and crack fade come into the market? I certainly think it's possible to see that. In terms of other levels, Tesla is slightly down on the session, trading at 195.99, so it is pulling back from yesterday's high. You are seeing distribution in Tesla, so the big question is, will this level, will we consolidate bullishly to build a base and move higher to the 220 level? Or will we get rejected off of this level? You are seeing Apple also slightly down in the pre-market. If I go to the intraday chart, we are short Apple obviously via swing trade, which are almost in the money, but it's trading at 153.92, so it is pulled off the highs substantially. Other than that, we're going to wait to see the pre-market movers. Natural gas is slightly down. The dollar's trying to still rally up. So far heading into the market, you're seeing the Russell down, Nasdaq down slightly, S&P's down. Oil's actually up on the session. Another attempt at a rally, but in terms of gold, you can see gold's actually trying to break out of this wedge pattern over here. Now it hasn't confirmed, but you are looking to be putting in this beautiful bear flag now. This was potentially a bearish wedge. Now it's actually turning into a bear flag. The difference between a bear wedge and a bear flag is bear flags have a this little bit of an upsloping trend as if the pattern is looking to move higher, but bear flags are more likely and more probable to break down than bearish wedges. So bear flags are one of the best technical bearish setups because they have the highest degree of probability of breaking lower. Obviously, if the dollar falls, gold's going to catch a bid, so we're going to have to be mindful about the dollar and see how that fares today. Let's flip back to the S&P just to see where we open. So basically, we should open down on the session. Pell rally, so a lot of chop, but this is the hourly reversal, and this could be the range that we're trading in now if we don't confirm above this on an hourly chart. So the hourly chart is going to be key moving forward over the next couple days to dictate whether or not we break out of that range. Let me just see if I'm seeing anything else. We did short Fortinet yesterday, FTNT as well, FTNT. So if you're part of our alert service, you would have got that alert. So if you look at FTNT, I issued a short at the 63.04 level right over there in the pre-market yesterday, which we are in the money now. Now if it was to continue to move to the upside, we could potentially see a retrace there and you could short that level, but we are in the money on our swing trade, so that's kind of another level to keep an eye on. Definitely extended. One of the other reasons why I did short this level, if you simply take a trend line and draw it across from this pivot, that's pretty much where it hit and intersected. So big time resistance on FTNT. It could push a little bit higher with momentum, but it is extended and off of this extension move. Let's take a look to see how Bitcoin is doing, BTC USD. So BTC USD on the 30-minute chart, remember we had that reversal signal yesterday, that engulfing candle over here. That's still technically intact. You tried rallying and breaking above it yesterday, and you actually had another reversal signal. So now you're still stuck inside of this range. So just like the S&P is going to be stuck inside of this range, just like Bitcoin is also stuck inside of its range. So lots of potential trading ranges to play the support and resistance. And we're going to really start to see if the markets can break that range or if it heads to the low end of the range. Time will tell. Time will certainly tell. You are seeing some strength, mixed bag in China stocks. Alibaba is up to about 107.30. So that's obviously on their AI ChatGPT announcement. Baidu is down. Our average 270. Let me see. Oh, here it is, 270.80. We're out of the money. Google's actually getting hit pretty hard here. Alphabet. So we have a potential trade long on Google. It's down about 4%. It's down about 4%. So in terms of where I like Alphabet, basically you have a gap fill that it's approaching here with a bunch of support levels. I would love to see it pierce that level and basically hit potentially this yellow trend line. But we may have a day trade long at a pierce of 101.42. And then you do have some additional support here at about 100.2. So let's keep an eye on Google for a long, Enphase, Uber for a short, Microsoft for a short. But definitely Google is getting hammered right now. So I do like Google for a long at this 101.42 level if we can get a couple dollar flush. But it is a pretty big move down on Google. level on Uber is around 38.60 and higher. So we're about 3 minutes to open. SPY is currently down just slightly. The dollar is down and yields are down as well. So we're about to open. So keep Google, Enphase, Microsoft, Uber. Second. So markets are about to open in 2 minutes, a minute and a half, and we will be open. You are seeing the VIX perk up a little bit, so that's certainly interesting. Tesla's down right now, pre-market. Let's see if we can make some money today. We are short Microsoft right now, holding a 2.6 position. We're slightly out of the money. Google's coming down still. So I'm going to be watching Google on my other screen. So Google's still continuing to trade lower. So markets are open. Microsoft's pushing up. Now it's coming in. Spiders are catching a little bit of a bid. Microsoft's continuing to push. Microsoft is pushing up. Google's caught a little bit of a bid. Let's check the spiders. A little bit of a buy the dip. Nvidia's pushing up. Microsoft's continuing to push up. Spiders are catching a tiny bid. Uber still hasn't hit our level yet, but getting close. 38.60 is the level on Uber. I'm going to add to Microsoft here, 247.49, 274.49, 49, MSFT, 274. You can even get a higher, better average than myself. So I just added to our Microsoft short. Nvidia is pushing up. Apple's seeing some weakness. Dollar's trying to creep back up. Microsoft's pushing higher. Microsoft is pushing higher. So our average on Microsoft now is 271.74, 3.6 position. You're seeing Enphase start to roll over. Baidu's showing weakness. Here comes Microsoft. Nvidia is continuing to push higher. Wow, what a move on Nvidia. Should be lifting the markets here. Let's flip back to the SPY. Right now, Tesla's still down in the session. Uber's still up. So really, Microsoft's the big cap tech that's lifting this market. It is the big cap tech. The dollar's trying to make a new intraday high. MSoft is now coming in. Microsoft is now coming in, so that was a good ad. Let's see what we can get on Microsoft. Nvidia's pushing up. Apple's remaining weak. Google's still trading off of the lows. Let's check energy here. So energy stocks are showing some signs of strength. Oil's up on the session. Potential topping tail forming on Microsoft. We are slightly out of the money. The dollar's trying to push up. The dollar is trying to push up. So the SMH is negative, but Nvidia is outperforming. Take a look at Nvidia. It's just non-stop, crazy move. You know, if you look at Nvidia, it looks like it's pushing for that gap fill. Let me flip to the daily. I guess Nvidia wants this gap fill level, which could be a potential short as well. Could be a day trade short at gap fill level. 230.60 is the level, but the markets are coming in now. So 230.60 on Nvidia is a great short level if it was to push up there. Let's take a look at the spiders. Spiders are coming down. Let's take a look at MSoft. Microsoft is still pulling off that last ad level. Let's take a look at Tesla. Tesla's coming down hard here. Look at Tesla dumping. Spiders are dumping. Why? Dollar is surging. Look at the surge. Yields are surging. New intraday high on the dollar. New intraday high approaching on the yields. So let's keep a look at the SPY. Google's still coming down. So get ready for a long on Google. Get ready for a long on Google. Google's coming down nicely here. Now, because the markets are actually very weak, I might let Google pierce this level. But Google's down now 5.39%. You don't see Google down that often. So mixed results. Obviously, Microsoft is stealing the thunder from Google. They're really trying to pull that market cap from the search engine. Obviously, Google and Microsoft are direct competitors in the search engine space. So it's just interesting to see that tug of war, capital clearly rotating into Microsoft, out of Google. It's really fascinating to watch. Let's take a look at Apple. Apple's basically trading off of the lows, but seeing a little bit of weakness. Let's flip back to the S&P. S&P is slowly coming down. Dollar's still surging. Microsoft's still near the highs. I'm just going to do another ad level on Microsoft. Microsoft's continuing to push. I'm going to add here at 275.78 short Microsoft. 275.78. I just added to our Microsoft. That brings our average up to 273.01. That's a 4-6 short position on Microsoft. Let me take a look at the gold market. Gold seeing some distribution. Baidu's coming in nicely. Google's hitting our level. Google's hitting our level. So get ready to go long on Google. Just give me a second. I just want to see if this market can actually bounce. Oh, I have not got filled yet. I am not filled on Google. I am not filled on Google, but I'll let you know if I take it. I'm just seeing what type of market bounce we get. Google's so close. It's filling and piercing that gap now. This is the level on Google, but I'm going to wait a little bit more patiently. Microsoft is continuing to surge up. Wow. 275. So Microsoft, you're seeing Nvidia pull off the highs now. Oh no. So Google's still coming down. Microsoft's pulling off of the highs a little bit, but remaining very strong on this market session. Very strong. Some of the mixed retailers like Nike are down. Google's still coming down. Microsoft's pulling off of the highs. Tesla's now turned green on the session. So we'll see if Tesla can fight off the downside pressure. And it currently is. Spiders are trying to pop. Google's still trending lower, so it's a good thing we didn't take that trade yet. Google is still trending lower. You're trying to see natural gas potentially bounce, but energy is remaining strong, the energy stocks. Amazon's down in the session, so remaining currently still weak. Google's still coming. Spiders are still trying to come up. Markets are still rallying off of the lows. Microsoft has pulled off of the highs, but Microsoft is still currently up 2.99%. 2.99%. Nvidia is still at the highs of the session. The spiders are pushing up. The SPY is pushing up. Google's down 6%. That's a crazy rotation of capital into Microsoft out of Google. Tesla's now positive. Microsoft's up 3%. Meta's seeing some weakness. Cisco's seeing some weakness. So Google's caught a nice little bounce here. Let's take a look at Microsoft. Microsoft is still seeing a potential little bit of distribution occurring. We're out of the money on Microsoft, but I do expect this gap fill to be filled in the near term. If we get a flush down there, spiders you can see are pushing. Still range bound though. Let's take a look at the SMH. SMH is trying to go positive. It is positive. Tesla's pushing up. Tesla's finally breaking out of its range, or at least trying. So this is the big level on Tesla. If Tesla can break out of this range, it may have more upside. Spiders are pushing, dollar softening, yield softening slightly. Google still remains weak. Uber's pulled off the highs. Google's still trying to catch a little bit of a bounce. Let's flip back to the SP Force. So we're seeing Microsoft now come in. The spiders are coming in. Spiders are coming in. Microsoft's coming in. We're still waiting on Microsoft. We'll see if the markets have any bit of weakness rolling in. Apple's starting to come down a little bit. So is Microsoft. Microsoft is now starting to show a little bit of weakness, profit taking. So the spiders are still remaining very, very strong. So could we see a little bit of rotation out? Still seeing strength in energy. Uber's pulled off the highs substantially, so has Enphase. Microsoft is still remaining near the highs, but seeing a little bit of distribution now. Spiders are pulling back a little bit, seeing some profit taking, distribution occurring. Baidu's coming down. Enphase has actually almost reversed all of its gains. It's still up 1.5%, but it was up a lot more. The Qs are slightly negative. Let's take a look at Microsoft. So Microsoft is coming in. We're still slightly out of the money, but you can see some distribution occurring. This is a perfect swing trade level as well. But right now the markets are remaining strong. The SPY is pushing up. Let's take a look at Google again. Google's still weak on the session, although it did catch a little bit of a bounce. If this was to come down here, it's still valid. It's still valid, but the spiders are pushing up. Let's take a look at the Qs. Qs are still slightly negative, but definitely remaining strong. Let's keep an eye on the spiders here. Tesla's still trying to push up. China stocks like Baidu are coming down. So this is the AI, the ChatGPT narrative. Baidu was yesterday announced this huge AI ChatGPT, their own search engine, gapped up on the good news, and now look what's happening. It's buy the rumor, sell the news. So again, this is crazy to see how these AI announcements pop to stocks and then they sell into them. So potentially with Microsoft's meeting, I think that's what's going to occur. Is people are buying this news and then the smart money is dumping into this news announcements. That's kind of my expectation. Let's look at the DXY. DXY is starting to creep up a little bit. US 2-year yield. Let's take a look at the 2-year yield. It's remaining off of the highs. Let's look at the daily chart of the yields just to see what the larger perspective is. You can see it's still consolidating bullishly. So We have to be mindful of that. We certainly have to be, but the markets are basically still in rally, euphoric mode. We really are still stuck in this range. This 415 to 407 is the range. Tesla's peaking up above that previous pivot. So Tesla's trying to break this range. It's trying to push for that 200 level. That's the power of Elon announcing his little bit of a his Tesla investor relations. And so we're seeing the markets continuing to grind higher. Markets are continuing to grind. Tesla's pushing up. Microsoft's pushing up. Tech is remaining strong. So tech is certainly charging higher. Tech is charging higher with this market rally.